Good morning and good afternoon, good evening, wherever the viewers are. I'm Barry Parker, and I want to welcome you to the Capital Link Trending News podcast series. So today we have with us from Navigator Holdings, we have Peter Zacho, who's the CEO, and we also have Randy Giveans, who's the head of investor relations and business development based in I guess you're in Houston, Randy, and Mats, I guess you're in Copenhagen, I guess.
That's right.
So nice to have you both on here.
Thank
So
you.
Navigator Holdings, it trades on the New York Exchange. The symbol is NVGS, and it's the owner and operator of the world's largest fleet of handysize liquefied gas carriers, and it's a global leader in the seaborne transportation of petrochemical gases, and those there's a long list of them, but they include ethylene, ethane, LPG, and ammonia. So those are just some of the top ones. Navigator also has a joint venture, and you own 50% of a terminal. It's an ethylene export terminal, and that's at Morgan Point, which is in Houston on the Houston Ship Channel. And the fleet consists of 53 semi or fully refrigerated gas carriers. 21 of them can take ethylene and ethane. And I guess that number, the 53, is prior to recent acquisition of more vessels that we're going to talk about. So today we're going to focus on the joint venture with, this is on the shipping side with Greater Bay Gas and the company's ethylene export terminal joint venture, and the developments in the LPG sector and its outlook. So first thing let's talk about is it's the new announcement, I guess about a week ago from when we're recording this, with Greater Bay Gas Company, which is another ship owner. I think they're based in the Far East, if I'm not mistaken.
Yes, it's China-based.
China-based. What that entails, and what does it mean for the shareholders of Navigator, and what are the benefits, and talk about just the dynamics of the deal, how it was achieved. So over to you, Mats.
Yeah, thanks a lot. We were really pleased to be able to announce that on Friday. It's the beginning of what was called a happy marriage, as I think our new partners quoted it in the press release. So we have been partners already for quite a while. We've been having vessels together in the Luna pool, a pool that has been operated by Navigator Gas since 2020. So it's really a relationship that runs a couple of years back. It's doing a lot of great things for us, this new joint venture. It means that we can renew our fleet with very well-performing new handysize gas vessels. They are pretty new. They were built in 18 and 19. They are very energy efficient, and they trade really well. They're ships that are very flexible, so we can use them to transport all of the different commodities that are in the sphere of our business. So we are very pleased with exactly these ships and having them join us. So 5 ships coming in, and that means that our average age is reducing by a little bit more than half a year, so going well below 10. So I think that really gives us a large, well-diversified and energy efficient fleet. So we are really pleased about it. Okay, when it comes to this, yes, please.
Yeah, it's a joint venture, so it's going to trade. The new vessels are going to trade in that same Luna pool that you mentioned.
Absolutely. It will continue to be in commercial management by our colleagues here at Navigator, who will be chartering the ships, and they will be in technical management by Pacific Gas, as they've been prior to this. So from a day-to-day perspective, you could say the way we operate them, it's not a big change, but of course us taking 60% ownership in the joint venture that owns the ships, I mean, it gives us great comfort that we can dispose of these ships over a long period of time and have them stay in the pool with us. So, and of course also cementing this relationship that we have with Greater Bay and Pacific Gas that we are very pleased about.
Okay, Pacific Gas is the other partner in the Luna pool.
They will do the technical management of the ships, and you could say that the partner will be Greater Bay, but both Chinese entities that we've known and worked with for quite a couple of years now. So, and if you look at the shareholder perspective, of course, it's also great for the shareholders. It means that we'll have a bigger earnings base. They will contribute with earnings once we take them over, and we'll do that gradually over the next 15 months. And they have a really low cash break even, so they will definitely contribute to our bottom line with a good result. So we're very pleased with that. So yeah, fleet renewal and a bigger earnings base is great for the shareholders.
Okay, good. Let's talk about your other. You have another joint venture, which is the ethylene export terminal with Enterprise that's on the Houston Ship Channel. Just talk about what the contracts you have, the nameplate capacity of that, and just what that's been doing. I know it's been a busy year in 2022. So what the throughput's been, and just if there's any discussions of expanding that part of your business.
So this is another happy marriage, you could say. It's a great joint venture that we have with Enterprise. We've been very, very pleased with it, and we think the same goes for Enterprise. It started up in 2020, and it has ramped up, and this year it has been operating above our budgeted throughput, and the total capacity is 1 million tons per year, so approximately 83,000 per month. And it's been doing really well during the past year. Of course, there's been periods when it's running above nameplate capacity, which it can for periods of time, and due to, of course, sometimes there will be a little bit of maintenance and so on. There'll be periods when it runs below, but 1 million or a little bit above is what we expect that it'll be running this year. We have some contract coverage. We have a number of large commodity owners that have committed to offtake from the terminal, and they have contracts that are running to 25, some of them even to 26, and we have about 94% coverage right now. So it's very secure cash flow for that joint venture from the business it's operating. So given it's been a great success, we will be eager to expand the cooperation with Enterprise, and they have already mentioned, we haven't talked so much about it, but Enterprise has already now officially announced that they would like to expand the terminal and have bigger throughput before 2025. So what I can say about that is that we are happily engaged in discussions with them, and we hope that we'll be able to say something a little bit more concrete in the not too distant future. But we want to have those discussions progress a little bit further before we become concrete.
All right, we'll have to watch for those announcements, and then I feel another podcast coming on.
Yes, so exactly.
We'll keep watching.
Yeah, no, it's strategically it's super important for us that we can complement our shipping expertise and our shipping assets with on-land infrastructure, so that we become the commodity pipeline or the infrastructure of some of these petrochemicals, ethylene, case in point here. So that's part of our strategy also going forward, and we are super pleased to be able to continue in those discussions about the expansions.
Yeah, you kind of beat me to the next question. I was gonna ask you about just the way you look at the company's long-term strategy, and I think I was going to ask you whether it's an either-or between terminal kind of ventures or shipping, and I think you've answered. It's really ideally it's to expand in both.
Yes, it is. I mean, our roots are in the shipping business, and it's only over the last few years that we've entered onto the land side. But we've been very happy with that, and we can see a lot of synergies and a lot of benefits from teaming up with strong infrastructure providers like Enterprise here. So we would definitely want to pursue both the expansion of the terminal, but also having our eyes open for whether similar structures for other commodities could be looked at. And here, of course, something like ammonia, which is a future fuel, could be a good example. So we will definitely engage in those types of discussions. But yeah, ships will also be on the radar. We think that consolidation in our sector has progressed some way. We have participated by merging with Ultragas just a little bit more than a year ago, and also now with this transaction with Greater Bay and Pacific Gas with the 5 vessels. So we will constantly be looking out for whether we can use Navigator as a platform for consolidation. So I think there are opportunities both on the vessel side and also on the infrastructure side. I think when it comes to building new ships, it's kind of difficult right now. The yards have been full building LNG vessels and container vessels, so that means that deliveries will take a couple of years to come on the water, which is not great from a shipping company's perspective. And also the new building prices are pretty high. So we would very much like to consolidate before looking at any new buildings.
Sounds like the supply chains will possibly be much more efficient. I mean, the more that the commodity side can work with the shipping side.
Absolutely.
Supply chain efficiency is a big whatever, and any topic that that I'm in discussions with across shipping sectors, it comes up. And
yeah, and it's obvious, you could say, with the technological development on having better IT and better data and so on, we want to reduce the number of ships sitting idle, waiting for business that may come or may not come, or they may be positioned the wrong places. With this type of integration, we can optimize the whole supply chain, and we can optimize the use of our assets so we don't ballast, so we don't have idle time and so on. And it's good for the consumer. I mean, that means lower prices for the consumers at the end of the day. So that's a win-win.
All right. Well, I feel yet another podcast coming on, but we'll just get back to the present, because we want to wrap up here. Just talking about the present market, the LPG and petrochemicals. Just what drives it, and I think increasingly the geopolitics come in. So maybe you want to say something about that. And then you mentioned just a minute ago, you mentioned ammonia, and it comes up, certainly in discussions of alternative fuels, but maybe on the commodity side as well. So I wonder if you could just spend a few minutes to talk about those things.
So the world has surely been turned upside down with the war in Ukraine this year, and that has meant that a number of supply chains have had to reverse or change in structure quite fundamentally. So a lot of things have changed and has impacted our trading as well. We had a good, strong start to the year. Over the summer, we've seen a little bit of a slowdown, mainly relating to Chinese imports of ethylene have been soft or declined quite a bit, actually. The good thing is we've seen that start building up again here towards the end of Q3 and into Q4. So we're starting to see imports from China again. And that's great for our business because that's a long ton mile transportation chain. So that means ethylene going out of Morgan's Point in Houston all the way to China. That's a long trip, and it's good for increasing utilization for us. So the fact that the ethylene business has picked up now is a good omen for the rest of the year. So we're quite happy with that. We also see that the ammonia, which is another big proportion of our business, has grown tremendously. It used to be that a lot of ammonia used in Europe was imported from Russia, and that's of course not the case right now. We also see that a lot of the production that has been happening in Europe has been scaled down because of high LNG prices. So we see ammonia being transported from North America, from Asia into Europe, and those are long distance trips as well. Maybe a year ago, we would have 2-3 ships traveling with ammonia out of our 53. Today, that number is 10. So a very large increase in our transportation of ammonia. So now it's a full 20%. And that's fantastic because we see ammonia as a very important commodity going forward. It's going to be a fuel of the future for shipping and for other transport sectors, or even for co-firing in power plants in Asia and other places. So there'll be lots of scope for transportation of ammonia going forward, and we would like to position ourselves as being the go-to people if you want to have an experienced shipping company to spar with in this respect.
Yeah, it's exciting. There's a lot. Yeah. There's a lot going on that we want to watch. I'm almost ready to end it. I think, Randy, I don't know. You've been very quiet there. I don't know if you want to add something, Randy.
Matt's covered it all, really. Certainly, as you mentioned, busy few months here ahead. Obviously, we announced the Luna Pool joint venture with our Luna Pool partner, Greater Bay. We have a few other projects we're working on as well, some debt refinancings. So with that, we're going to be participating in the upcoming Capital Link London Forum on October 18th. Mads will be there as well. And then on November 10th, down here in Houston, we are hosting an Investor Day. So if anyone is interested in that, feel free to reach out to me for that. We'll be here in Houston. We'll go see the terminal, see a ship. I have some presentations. So it'll be a great day and a lot of hopefully fun announcements in the meantime.
Okay, that's great. Well, I think we're done. We covered a lot, and we've booked at least 2 future podcasts that I can think of here, and probably each this is fascinating because each commodity that you talk about, there's a whole world there, and I imagine for every one of them there's a geopolitical story that's unfolding as we're talking here. So let's wrap it up. So I want to thank you for coming on, Mats Peter and Randy from Navigator Guests. So this is Barry Parker signing off for this podcast and the Capital Link Trending News podcast series. Bye-bye, everybody. And thanks again for coming on.
Thank you so much, Barry.